What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 2. It's October the 12th, 2023. We made some trades today, so let's get into it. So let's go ahead and jump right into it, and let's start off with trades 1 through 2. So right before trades 1 and 2 happened, we saw the market open at 9:30. They kind of consolidated a little bit, and then they sold off hard right around 9:45, and they came all the way down to a low of around 33,830. So this is where I start looking for my trades on 1 and 2. So right here at 1, I shorted right here expecting for prices to come back and actually break past this wick right here, but I think I got in a little bit too early, and what I need to do is wait for prices to actually close below a level of resistance and then short as they come back up to retest it. Now on trade number 2, I actually had the perfect setup where I waited for prices to actually close below resistance. They did that. So then I waited for prices to come back, retest the lows for this higher low right here, and that's where I shorted from. Now that right there would be a typical entry for me when it comes to the short trades during a very strong downtrend. But the only thing is, if we read the notes, it says, remember to skip your short setups if it comes near the lows of the swing. So even though I might see my setup right there, if it comes near the lows, I got to skip it and let it go, because no matter what the circumstances might be, I just want to try and avoid going short at the lows as much as I possibly can, because me going short for the lows based on my strategy is just a low probability trade. So I need to cut that out of my wheelhouse and kind of get rid of that action, because I think that's holding me back a little bit. So that's the biggest thing I learned on trades 1 and 2. It's like, look, you can have your setup, but you also got to make sure that the environment that you're trading your setup in aligns with the setup that you're also trying to take. So after trades 1 and 2, we see prices come back up to retest a previous level of resistance, the first level of resistance that was established after this first lower high right here. And once they did that, they pulled back to retest the second level of resistance, but couldn't quite break past it, and they formed a higher low right here. So right there, I just started to use my higher low strategy, and I applied it right here. So if we read the notes, it says, I went long right here as prices came back to retest the higher low support level. And when you're looking for a higher low to get tested, this is pretty much a textbook example of how you want to play it out. You want to let the higher low get formed, and then you want to see prices come back to retest the lows of the support level that was established from the higher low. You go long from there and you take it back up to the next level of resistance above. So that's what I did right there on trade 3. Had a second opportunity to get in right here, but I passed up on that because I wasn't quite sure if this resistance level was going to hold up as resistance and send prices back down, or if the higher low down here was going to hold up. But I feel like I made the right decision right there by not getting in the second time. And that brings us to trade number 4. So I went long right here as prices came back to retest a previous high, but I got out when the momentum faded. Because a lot of times when you see a higher low that continues to move higher, right, sometimes you get that retest and you can catch that higher low strategy that you like to use. That works. But in some occasions, when the prices keep moving and keep pushing past that previous swing high, you might not get prices coming all the way back down to retest that higher low. So instead, they'll come back to retest the previous swing high. So that's the reason I went long right there, and I expected for the move to continue. But as you can see, we had 3 wicks that all closed lower at each one of its highs than the previous candle that came before. So that was more so a sign of bearish momentum starting to come into the market. When you combine that with the fact that we were already in a very strong downtrend before all of this up movement happened, I was like, you know what? I feel like it would be better for me to just get out here with a very small profit, but just get out of this trade because I'm not comfortable with it, and I don't see the same reasons that I got into it still holding up. So let me go ahead and get out and wait for a better opportunity. So after that, we see prices push back down a little bit, create a lower high, and then they finally sold off all the way back down to retest this previous higher low that got established from trade number 3. So on trade number 5, here's where we're wrong. I tried the short right here based on a valid strategy, which was I saw a lower high get formed right here in an overall downtrend. So once I see the lower high, that tells me that the selling is about to pick back up. So therefore, after I see the lower high, I want to find the swing low for wherever that lower high came from, mark it up, and then try and go short as prices come back to retest that level. So in this scenario, the place where the swing low was located was right down here around 870, right at these wicks right here. So As prices came back up off of support, I shorted right here at the wicks, expecting for prices to continue moving downward. But what you also don't want to ignore is the fact that it was a higher low that got established before, and that support level still held up. Now, you don't know beforehand whether or not the support level is going to hold up, but it does give you signs about how much demand is at that level when you can see the reaction that happens. So if we look at the reaction on 5, we came back down to this level, wicked away from it, and then immediately started pushing back up to the upside. So anytime you have a support level where you see that type of price action, that indicates that momentum is coming into the market. So you don't want to short in front of that momentum, because you never know how far prices can actually run before they actually decide to turn around. And in this situation, we came from these lows at this higher low right here all the way back up to 905. So that was 860 to 905, around 45 points before prices actually reversed. So that's a big reason why I don't want to get in front of momentum. And that was the biggest lesson I learned right there on trade number 5. Don't trade against momentum. That's very important. So after that, we see prices spike back up to 605. They push back down, created a lower high right here, pushed back down to the previous higher low section, and then came back to retest what used to be the lows for this previous lower high that we were talking about just prior to this one, right? So remember, when it comes back to that when it comes back to that previous higher low, after it's already broken through it, that support level now becomes resistance. So then I want to use that as a reference point to go short from if I'm looking to enter on a short trade. And that's pretty much what I did on trade 6 through 8. And that was a good idea that I had. I think the idea was legit, but it was the execution that really threw me off right here, because if we read the notes, it says on 6 through 8, all 3 of these trades could have been profitable if I shorted from higher prices. And that's the biggest lesson I took away from right here, which is you can have your levels that you want to short from, but don't try and jump in front of those levels by too much and too large of a factor, because if you look at all of the places that I got stopped out on trade 6, trade 7, and trade 8, they all came towards the highs of that overall swing. So anytime you go short and you get stopped out at the highs of the swing, that means that your entry was a little bit too early. And more than likely, you would have been very profitable if you would have put your stop, or if you would have put your entry exactly where your stop was located. So that's important. And I think that comes back down to having a mindset of abundance, because the reason I got in so early right here on 6 through 8 was the fact that I felt like the market was going to move without me. So I wanted to make sure that I got in. But you always want to get into the market. But when you get in, you got to make sure that you get in from the best possible prices at the best possible levels. And if you can't get in from there, you just let that trade go. And then you wait for the next best opportunity where you can get the prices and scenario that you want, because there's nothing in the market that forces you to take a trade. If a trade isn't exactly how you want it to be, man, you can pass on it and then wait for something better to come down the line and then make money on that trade. So that's what I learned right there on 6 through 8. Very important lessons right there. So after trade 8, we see prices come back down. Now they finally actually broke past this previous higher low that got originated on trade number 3. So once they broke past that level and closed below it, I immediately started looking to treat this level of support from the higher low as resistance now that has been broken through. So as prices came back to retest that level, I shorted right here. And on this one, I had a great entry. I'm not gonna lie, this was a very great trade. It followed my strategy perfectly. I did everything right except for get my exit correct. And I say that because if you look at where I entered around 855, right? Now, the most logical levels to get out at would be the level of support down below at 845, or these levels of support down below where we had a double bottom that established the lowest prices of the entire session up until that point. So if anything, that's where I should have gotten out. And that would have given me about a 30-point profit, which is pretty doggone good. And that would have brought me back to break even on the day. Now, I got a little bit greedy right there because I saw not yesterday's closing price, but the day before yesterday's closing price at 809. And I saw the momentum that prices were moving to as they were coming down towards that level. So I just said, if anything, the momentum should probably continue all the way down to that level, which is a good idea to have. But you always want to make sure that the market confirms that to you. And I think when you have levels in front of you that are clearly obvious and that are already marked up on a chart and have been interacted with before, it would make more sense to just take profit at those levels. And then if the trend continues to move on, you can always get back in and catch the rest of the move. But lock in what you have when you have it, because nothing in the market is ever guaranteed. And that's the biggest thing I learned on Trade 9. So even though I did make profit right here, the profit was decent. It wasn't bad, but I just left so much on the table that I feel like that was not the best execution on my part at all. And that's something I definitely got to work on, because when you have your best trades, you got to make sure you capitalize on them. So that way, when you run into losses later on, you can have a little bit of cushion and wiggle room to weather the storm. So that's very important. So after prices come back to retest that level, they shot all the way back up, came back up to retest the same swing highs that we made at 0.6 through 8. So once we hit that, we established this higher low right here. So I went long at trade number 10, and I went long as prices retested the support level of the higher low. Now, sometimes when you're trading these higher lows, prices are just going to run past that level and you'll happen to get stopped out. Now, in this situation, that's what happened, but I had multiple opportunities to get out of the trade with at least a little bit of profit or at break even. Because if you see this little wick right here, it popped all the way up and didn't quite get high enough to make an equal high with the swing high that happened before. So that right there is technically a lower high. Now, once I saw that candle, I kind of just froze up, because I was in profit for 1 second and then back to break even the next, and then negative the next second after that. So I was just like, man, what should I do? And by the time I thought about getting out of the position, the market had already moved to my stop price. So a lesson right there to learn is that even when you trade your setups, you can't freeze up. You got to have an idea about any and all possibilities that could happen. And then you got to have contingency plans in place for all of those things. So if it goes my way, this is what I want to do. If it doesn't go my way, this is what I want to do. You don't want to freeze up when the market starts giving you things that maybe you weren't necessarily expecting, but you plan for anyway. So always make sure that you don't hesitate, which means you got to have a plan beforehand. So for me on trade 10, I would say the biggest thing I can take away from this is to just be a little bit more patient. Wait for your levels to get hit first and foremost before you get in, because when a level gets hit, you can see the reaction around that level. And if it's a reaction that you like and that lines up with the trade that you're trying to take, you can go ahead and get into that trade. But if you don't see the reaction that you want, and if you wanted to go long, prices kind of push through that level a little bit more than you expected, you can always pass on that trade or go long as they break back above support. But you don't have to just go long because it comes back into that higher low level. So it just comes down to patience, man. That's very important, and it's something that I've kind of lacked a little bit throughout this session. But now that I'm realizing that I made some mistakes, I can always go back, fix them up, and clean them up, and that's what I plan on doing. So that was the lessons that I learned from trade 10. So then we come back on trade 11, and once we had that lower high right here, we broke past the higher low level from earlier. So I said, okay, the selling is back on. So therefore, I want to go short as prices come back up to retest a previous level that used to be support, but is now acting as resistance, and that occurred at 850. So I shorted right here, just expecting for prices to come back down to at least maybe this wick right here, or all the way back down to retest the bottom and give us a triple bottom down here. But I think that was just a little bit too early on my part. And what's interesting on trade 11 is that my break even trigger is 10 points. So when the market moves 10 points in my favor, my break even automatically gets triggered. But there will be times in the market where the market moves 9 points in your favor, but your break even trigger doesn't get hit, and then the market starts to move against you. What I've learned is that in scenarios like that, you just go ahead and move your stop to break even on your own, since it didn't happen automatically. And I say that because, you know, one tick is not really something to stress about that much. So it's like, okay, my trigger might have been 10, but if it was at 9, it would just make sense to go ahead and move it back. But I was like, you know what? Nah, I'm not going to do that. I'm going to let my trade run, and I'm just going to let the market do what it does. That's not the idea you really want to come into. I mean, that's not the idea you really want to come into the market with, though. When you have a trade and you see something happening and you see the signs that are telling you that it's happening, you don't want to ignore it just because you have ego and you say, well, if I took the trade, it's got to work. it doesn't necessarily always have to go that way. So don't get too caught up on forcing the trade to work if you see it starting to kind of fall apart. If the reasons that you originally entered into the trade for are no longer holding up, just go ahead, get out, and then wait for a better opportunity. So after trade 11, I had to take a break for a little bit because my account came all the way down to 692. We were at a high of 25,184 yesterday. So we was off by a pretty good amount. So that's what, 700 plus 184. That's 884 plus 2. Well, my bad, plus 8. So that's $892 that I was down by. And I was just like, man, this is too much. So I came back a little bit later after I got my mind right. I was like, look, I studied my notes. I went over the trades that I made. And I said, okay, what I'm doing is I'm being a little bit too impatient and I'm trying to rush into the market instead of waiting for my best setups. I'm just trying to trade what's there instead of trading what I'm looking for. So I came back in the afternoon with a better mindset and I said, look, I'm only taking trades that really make sense. And it just so happened that the afternoon happened to be very volatile, which turned out to work in my favor. So let's talk about it and let's see exactly what happened. So okay, let's talk about part 2, trade number 12. So I shorted the bear spike right here, expecting for the yesterday's closing price from 2 sessions ago to get hit. So that's what I was talking about when I said 809. So I shorted right there and was able to just take it down for about 10 points. I was trying to get in a little bit higher, but the market was moving so fast that was all I can get. But hey, I'll take my 10 if I can grab it. So then we move on. We see the downtrend continue. We made a new low, came back to retest the previous low, found resistance right there, and then sold off to create a new low. So based on my strategy that I use when downtrends are present, I'm waiting for prices to come back, retest the previous level of resistance, and then I want to go short. The only thing was, if you look at where the level of resistance was, it was up here towards 790. But my entries were down here on the short side towards 775. So I'm around 15 to 10 points away from the ideal level that I'm supposed to be shorting at, and I had to take losses because of that, and I paid for that. Because if we read the notes, it says on 13 through 16 I was shorting way too low right here, and I need to short higher because my idea was right. I was looking to see continuation of the downtrend and expecting for prices to continue moving lower. But anytime I've shorted at the lows, what I've realized is that I'm always coming into those trades with a mindset of FOMO, thinking that I have to short at the lows because the market is about to break and I don't want to miss out. More than likely, when I start feeling that way, it's just always better to put my entries where my stops would have been if I would have shorted from the lowest prices. And I think we ran into that same problem on 6 through 8. So that's a very common thing that's happening for me today, and that's something I gotta clean up because it's affecting me way too much and causing me to take some losses that I don't want to. So that's pretty much what went wrong on 13, 14, 15, and 16. But then I came back on 17 and I shorted, but I shorted after we made a break of a previous higher low. Because if you look at where we started from, we had a triple bottom followed by a higher low, a very small higher low, but a higher low nonetheless. So once prices actually broke past this level and then came back to retest it, that's when I shorted. So it's important to not only have an idea in the market about where you expect for prices to go, but you also have to wait for the market to confirm to you that it does want to go in that direction that you're thinking of. And once you see that confirmation, then that's when you want to enter your trade. So that's what I learned right there between trades 13 and 17. So then we see the downtrend continue. We created a new low right here at 717. And what's interesting is the fact that we had a very high volume candle. Now, I know it's been a minute since I talked about volume on my trade reviews, but if you guys need a refresher on the volume course, make sure you go back to Trading My Live account, go to that playlist and go to day number 41 from August the 7th, 2023. The title for the video is called A Deeper Discussion on the Importance of Volume. And I talk all about volume and why it's important and how you can use it. And I'm going to talk about that a little bit more today as we continue to move on. So notice how we had that high volume candle right there. And from that point, we came all the way back to retest a previous level of resistance. Found resistance right there, sold off, came back up to retest what used to be a previous low. So that is where I went short at trade number 18. So I shorted here as prices came back to retest resistance, just following my trading plan, taking the trades that make sense, and then I would say holding them back down to the best levels. But on this one, I left some on the table also, because if you look, I shorted right here and the level of resistance was already established where this high volume candle was. So it would make sense that the market would probably find a little bit of temporary support right there. It doesn't mean that the market is going to turn around right there, but if people were looking to take profits, that's probably where they would do so. And I had the opportunity to take profits right here, but the market moved so fast and moved back towards my entry price that I just decided to go ahead and get out before it came all the way back to break even, which is cool. You know, I made some profits on that one, but I left too much on the table, and that was something that I definitely could have collected. So points on the table that we leave that could have been collected, we want to make sure that we collect all of those points by making the right decisions, and that's very important. So after trade 18, we see prices finally break back down below resistance, close below it. Well, this is actually support that became resistance after we broke down through it. So after we broke down through it, we came back to retest it. I didn't short right there because I just wasn't quite sure if the market was going to continue to move lower after this, because I saw that maybe we could be establishing a potential double bottom. So I said, you know what, I'm gonna just wait and look for a better opportunity. And even though the market moved down right there, I felt like I made the right decision by waiting, because I wasn't quite sure what I was looking at. So I just could wait for something better. And then that led me to trades 19 and 20. So on 19 and 20, I shorted here after a higher low was violated and then retested, which is one of my favorite strategies to use when I'm trading in that downtrend. So notice how prices came back up to retest this level right here. I did short at 19, but I just got out of the trade really quickly for all of the reasons that I just told you. I was just very uncomfortable with the trade and it didn't feel right. So I said, you know what, I'll wait. So once we got the higher low, I said, okay, let's see if the market wants to continue moving higher or if they're going to violate this higher low. And they violated that level of support from the higher low, broke back down below it. And as soon as they came back to retest it, I shorted it and looked for prices to come back down to retest 675. And I got out just a little bit in front of that level and made a pretty decent profit right there. So we see the downtrend continue. We came back to retest the same entry point that I got in from at trade 20. And then we see prices push down to make a new low. Now right here, they did make a higher low, but not the strongest higher low. So when prices broke back down through there, I just wasn't quite comfortable with shorting right there, because I didn't know if that higher low would hold up or if it would be violated. So I said, you know what, if I'm unsure, let me just sit out and wait for something that's a lot better in terms of what I'm looking for. So we see prices push down, create a new low right here. So what's interesting about this new low is that we start to see volume pick up a little bit more. So notice how we had normal volume from this candle that I talked about earlier. We had normal volume since that time period, but then we had high volume roll in right here on this low. Then we had high volume roll in right here. Is that the same low? I think that's the same one. But then we had it come in right here on this low, and also again right here at this low. So anytime you are in a strong trend and you start seeing large pushes in that direction, but they're made on high volume and they start coming back to back to back to back, that's telling you that everybody in the market who wants to participate is pretty much doing so. And eventually it's going to come to a point where everybody that wants to get in has already done so. So therefore, but therefore, if nobody else is left to get in, the market needs to go the opposite way. Because if all the sellers have already shorted, well, if there's no more sellers to go short, then prices are probably not going to go down for too much longer. And it doesn't mean that it's going to be an immediate turnaround. It just means that the signs are starting to pop up that are showing you that a reversal is imminent in the immediate future. So just always keep that in mind when you're looking at the volume. And that actually led me to trade number 21, because I shorted here expecting the high volume candle to act as resistance, and I should have held this one. So when I talk about the high volume candle, we can follow it over to, I believe it was this candle right here. Yes, that's exactly what it was. So notice on this candle, we had much higher volume than all of the candles that occurred before it. which tells us that it was a lot of business done at this candle, which means that these price levels are important. So if we're in a downtrend, I said, okay, if this was the high volume candle, more than likely we should come back up to retest the highs of that high volume candle, and we should find resistance right there. And when you add in the fact that the highs for this one candle also happen to line up with what used to be a previous swing low over here that should now act as resistance, it made that level even more lucrative and more attractive to go short from. So that's exactly what I did on trade 21, but I didn't even get stopped out right here. I closed this trade manually because I saw the momentum that was coming up into my entry that I took the short trade from, and I said, you know what, I don't want to get in front of momentum right here, so let me just get out and not try and trade against momentum. But in this scenario, when you have all of your signals lining up at once, everything makes sense, and you have volume that supports your idea, you got to hold that trade and just live with the results that you get. It's either going to be a profit or a loss, but don't close that trade out early if all of the reasons that you got in are still holding up and are still legit. Don't be scared. You got to be willing to accept the risk that comes with your best setups, because this one would have been a great trade for me. I would have been able to take it from 51 all the way back to my scalp target at 31, and if I wanted to, I could have took it a little bit further down and caught 30 points off of it and made a little bit extra. So just a lesson learned right there, which is stick with your trades if you believe in them and everything is lining up to show you that that trade is legit. So then we came back to trade number 22. So I shorted right here at resistance, but I cut the trade when I saw the buying momentum starting to roll in. And when I say momentum, I'm really talking about what I was referring to earlier when I said that when you see those high spikes in volume and those pushes to the downside start to come a lot more frequently, that's starting to tell you that, hey, the sellers might be kind of rolling over right here. And then when you add the fact then that we came back down to 625, which was a major quarter level, well, a minor quarter level, but a quarter level nonetheless, and those actually hold up a lot more in a strong downtrend, which is pretty interesting. So when you see the fact that we're coming back to a major level, we had 2 wicks bouncing up off of it, and then I shorted from right here. I'm like, that kind of brings me back to where we were on trades. Let me see, on trades 1 and 2 when I first started today's session. Shorting near the lows, even though you see a setup, is something that you just don't want to do. So I shorted right here anyway, but I was like, look, I was in profit a little bit, and I said it really does not make sense to be going short towards the lows of the entire session right now. So since I am in profit and the market is giving me a break, let me get out and just take that little small profit while I can. And I think I made a great decision right there, because we see what happened after trade 22 got closed out. We had a crazy move to the upside, and my stop would have definitely got hit if I tried to hold on to that short trade. So anytime you see momentum coming into the market, if you're trying to trade against it, don't do it. And anytime you see a setup start to form towards the lows of a move or towards the highs of a move, if this was an uptrend, don't get in. Just skip that trade and wait for a better opportunity. So after the move to the upside, we see a higher low get formed, the first one. So that tells us that the buyers are in control. And then from that point forward, we had another higher low get formed, but that higher low got formed after we came back to retest that major level of, I guess you could call it resistance from that high level, that high volume candle that we were talking about earlier from 1:30 this afternoon. So notice how we had all of this momentum to the upside, but as soon as we got back to that high volume candle from before, we immediately saw resistance and prices sold off, and they kind of played around that level for 5 minutes before they finally decided to push back up and break past that level of resistance, which now should make that level support. And now that that level has turned into support, that's pretty much what helped validate me going long at trades 23, 24, and 25. So up here, if we read the notes, it says, I went long here expecting the low of a high volume candle to hold up, and this was also a prior swing high. So if you notice the swing high that we made before during this uptrend, it was right here at 717. So we came back to pretty much just retest that level. We tested the wicks first and then came back to test the bodies next, and then that's when we saw prices continue to move up and the uptrend continue. So when I talk about using high volume candles, these things work all the time, because A high volume candle just tells you that it was a large number of contracts that was done on that candle, which means that somewhere within the price range on that candle, one of those prices or a group of those prices are going to be very important and are probably going to be a pivot point where you can either go short or long from, depending on what you're trying to do in the market. So I just waited for prices to come back, retest that level, and as soon as they did, I went long, and I was able to make a nice profit out of that. And that pretty much brought me all the way back up to 24,887. So not bad. Made another 20 points net. So I think overall I finished the day down by 297. So I traded 2 contracts, so that's $10 a point. So all in all, I'm down by 29 points, which is not good, but it's not bad. But when it comes to my losing days, I just think if I am gonna have a losing day, I need to make sure that I keep it within a reasonable amount. Now for me, it's really nothing to get 29 points. If I'm only 29 points away from whatever goal it is, I feel like I'm in striking distance. And as long as I'm in striking distance, my confidence remains the same. I always believe that I can make that money back, make good trades, and then get myself to where I want to be. So I think that's very important. And I ended the day in a good place. But I shouldn't have had to go all the way down to 692 in order for me to get these things right. You know, that's just unacceptable, because overall my loss limits should be 45 points a day, which on $10 points per contract is $450. So the fact that I was down by 600 plus, and I still kept trading, that was a problem. Now today I was able to make it back and actually get back down below my loss limit, my daily loss limit, but that's just a bad practice. And today I was able to make it back. But what about on all those other days when you have a bad day and then you come back and try and work your way out of your hole? You think that you're trying to climb up out of the hole, but you're actually digging yourself a deeper hole. So even though today worked, the actions that I took were still not something that I want to carry forward into the future, because I just don't feel like those types of actions are sustainable, and that's not the type of path that I want to go down. I got this funded account after a very long time, and I want to make sure that more than anything, I keep this account. I'm not going to blow it at all. I refuse to. I will not let that happen. It's up to me. It's up to me. I'm accountable for all of my decisions, and I will make the right decisions. So I think today, the biggest thing I need to focus on is definitely patience, and definitely having an idea about the market, but getting in from the proper level. Do not have FOMO. If the market moves without you, it moves without you. But more than likely, it's probably not going to move without you. It's going to come back to hit the perfect price that you wanted, as long as you were patient enough to wait for it. And then you can catch the trade and make the profits that you were looking for, and then wait for the next best opportunity. So that's really what it comes down to. I just need to be a little bit more patient. But overall, I feel really good today. You know, today taught me that I can be the trader that I want to be. It just comes down to being patient enough to wait for my best setups and not take anything else. So I think I started off pretty well this morning doing that, but I kind of lost my discipline around 6 through 8, and then I was playing catch up the rest of the day. So I got some work to do tonight on my practice sessions, but I feel like I can definitely correct all of these problems, and I'll come back tomorrow ready to finish the week off strong and get this account back into profit, because we're at 887 right now. So that means in order to get back to 25,000, we need about $113. So that's what, 11 points, 12 when you factor in commissions. So that's nothing. 12 points is like half of my original profit target for one of my regular scalp trades. So all I need to do is come in tomorrow, make 1 to 2 good trades, and then I should be right back on target, right back on point, and ready to continue to make these gains get back to where they should be. So I appreciate you guys for tuning in with me today. It's been a good session. I hope you learned a lot, because I definitely did. I'll be back tomorrow, October 13th, 2023, ready to run it back. But until then, you guys have a good one and take it easy.